An economist said a possible change in government had already been factored into the financial markets, and that any volatility as a result of former Prime Minister Muhyiddin Yassin's resignation would be brief. We've expected for some time that the government would change, so much of this has been factored into financial markets. So volatility in financial markets will be brief and normal, Geoffrey of the Malaysian University of Science and Technology told FMT. He said the incoming government must lift the lockdowns immediately, arguing that this will be crucial for economic survival. We are at a critical point now, the risk of tipping into a deep contraction. He added, however, that there was already a positive shift in the attitudes towards public health measures to curb COVID-19, pointing to the reopening of activities in more states and sectors announced recently. He hoped that this would continue so all sectors and states could eventually reopen. Even then, when we open up the economy, we will require continuous support for households and firms. For households, we think direct cash handouts of 1,500 ringgit for B40 and M40 for the rest of the year. This would cost about 35 billion ringgit if it started in September. For firms, we feel that following the example of Sarawak, which has offered a recovery grant of 10,000 ringgit for SMEs, would be helpful and would cost less than 10 billion ringgit. With this and opening up for customers again, this will spur recovery. Other incentives, such as wage subsidies and rehiring grants, should also continue. The government should also focus more on social welfare, including rebuilding pension funds, reforming education, and restructuring healthcare and social equity.